The bull market is back. SPX is up 20% from its April lows, up in the 5,800 region. But could a crash be lurking in the background? Here's what my charts say about how long this rally can last and those pivotal moments coming up in the next few months that we need to be aware of that can bring us back down. All of that in today's video. Let's go. Hey traders, Jeremy Ritz here. Courage pays better than fear trading. Your very own market nerd, here to talk to you about this bull run that we are back into. After hitting lows on April 7th, we had a massive move down 21%, but now the bulls have stepped back in and pushed this market higher. S&P 500 is up over 5,800 points, 20% off the lows from April, technically defining the market as a bull market. That's the technical definition, 20% off the lows. But here's the catch. That 21% drop that we saw from February when we hit all-time highs into April could potentially repeat itself later this year. And you have some experts, one in particular, Jem Carson, who's predicting a 30 to 40% crash later this year. Today, I'm going to break down how long this bull run could last, my targets on the SPX, and the key events coming up in the next 2 months that could derail this move, like tariffs, trade deals, the Fed, NVDA earnings, all of that and more. But let's jump in with technical analysis. All right, so here is a clean chart of the SPX, and we can see the all-time highs that we hit here in February. We can measure these down to those lows in April. That was April 7th. We dropped 21%, and that officially labeled this technically as a bear market. And we could see since that point, we started to climb and grind higher out of that bottom. And currently, as we stand now, you can see that we are above all the significant moving averages. You can see that I have the 50 simple moving average here. That's the blue line. We have the 100, which is our green line right here, the 100 daily simple moving average. And then we also have that 200 daily simple moving average. So we are above all of those simple moving averages on that daily time frame. And when you can get above, that indicates that you are in a bullish trend. And now what we have to watch for is how much further can this go technically? If we're looking at this from an all-time high perspective, we're looking at 6145 as the area where we will retest those all-time highs from February. And so what we want to see is as we grind up here into the 6100s, if we do, how does the price action interact here? And you would think this would serve as some type of resistance. There would be a rejection and maybe some choppiness, sideways movement before, if it actually did break through to make newer highs. But here's the thing to keep in mind. May, from a seasonality standpoint, is a bullish month. So it is expected that during the month of May, there are bullish moves. There are runs higher in the market. So potentially we can explain this push, not just on the trade deals that have been achieved, but also to the seasonality of May. Now, keep in mind, when you go to June, weaker seasonality. So as traders and investors, we have to be on guard and that things can change at any given point in time. Now, what would be an area that we need to keep an eye on that could signal to us that potentially some weakness is coming in and we could make newer lows? And that's going to be this candle right here, which really was the pivot point for the move that we've been on here recently. And this was from April 21st. And you could see if we just zoom in, that candle is inside of the 90-day pause candle. That's when Trump paused tariffs for 90 days. We had that big move. And then we basically chopped around inside of that candle for a period of time. At 5,100, if we were to get some weakness and to come back down into this area, what I would want to see is that we get a lot of buyers who step in and the bulls would drive this up. That would be the scenarios that bulls would want to see if weakness comes in and the price drops. If this price area gets broken, then more than likely what will happen is the lows from April 7th will be retested. And if these break, then potentially we could get a bigger drop or even a crash like the one Jem Kerson has been talking about. And we're going to discuss that here in a few moments. So what possibly could derail this current bull run? And it's got to start with the tariffs. If we don't continue to see deals being achieved between countries, trading partners, if we don't continue to see clarity emerging from the murkiness of these tariffs, then that's going to provide some instability to the market and uncertainty, which it does not like. So we want to monitor and keep an eye on what is happening with the tariffs, with trade deals. Second, we want to be mindful and aware of the June Federal Reserve meeting because traders and investors are pricing in a rate cut in June, which will be positive and bullish. We also want to pay attention to Jerome Powell's comments come that Fed meeting presser in the middle of June and what his comments are surrounding the economy, surrounding inflation. And does he have a dovish tone or a hawkish tone? So you want to be aware of that and pay attention. Here's the other part. If somehow rates are not cut, the market would not take that too kindly, and we could see a subsequent drop in the price of equities. And there are two other pieces of data that we need to be aware of. And one is related to the video series that we've been doing, the 3-part series on NVIDIA earnings on May 28th. We need to be aware of that. If those earnings somehow are poor, if Jensen Huang is giving poor forward guidance, if he's seeing the murkiness of the economy or uncertainties still surrounding tariffs and impacting NVIDIA, that could pull the entire market down because NVIDIA is such a large part of the indices that we could see a subsequent big move down. Mark that on your calendar. Check out that video series if you haven't done so. NVIDIA earnings May 28th is going to be huge. And then the last thing that I want to talk about is the unemployment rate, the health of the labor market. This is something that Jerome Powell is focused on. It's part of the dual mandate of the Fed, inflation and a strong labor force. And we need to see what the unemployment rate is going to come in to be in June. Now, it's been hovering around 4.1, 4.2% for quite some time. Will it stay steady? Will it decline? That would be bullish for the market and would allow this move to sustain itself. Anything higher, and we could see a drop downwards. Now, here's the scary part when we talk about Jem Kerson's prediction of a 30 to 40% crash. Now, I know I'm butchering his name, but I doubt he's watching this video. But Kerson talked about structural vulnerabilities in the market and that the Fed needs to stay dovish in order for this move to continue. But he's saying that the market is overvalued and he sees a potential 30 to 40% crash after this rally that we're in right now. And so if that would come into fruition in late summer, according to his prediction, the markets will drop 30 to 40% from all-time highs. Will those be the all-time highs from February, or will the market make new all-time highs here in coming weeks? We don't know, but keep an eye on that in terms of where the market heads and if Kerson is accurate in his prediction. So how do we trade this new bull run that we're in? For me personally, I am being quick with day trades. I don't have any swing positions at this time. I want to wait to see more clarity, but there have been plenty of day trade opportunities out there in recent weeks, and that should continue. But we want to be mindful and ready for when these key dates hit. We're paying attention to new trade deals coming. We're paying attention to the Fed rate decision in June. We're watching for NVIDIA earnings, and we're also looking for that unemployment data at the beginning of June. Those things will really give us a feeling of where we are headed. But the reason I'm not ready to go fully long yet is because I do think there is at least one more retest. I'm not saying that we have to go all the way back down to the April 7th lows, but I'd like to see one more drop, one more retest, create a double bottom pattern, create some structure that we can then proceed out of and move higher. We may even get some chop. So it's just purely day trading for me now. And I do think that we have enough momentum to get back up to 6,000 before it's all said and done. But we need to, as always, protect ourselves with our trades, with stop losses, and have clear targets for where we are going to take profit. Let's recap. The SPX bulls are running this thing up. There's reason for optimism due to the trade deals being completed, but we need to be aware of those factors that could ignite another crash like we saw from February into April. So make sure you're aware of the NVDA earnings, of the Fed rate decision coming in June, of unemployment rate that's coming, and pay attention to what is happening with tariffs. Because if you are aware and empowered with that knowledge, you can make the best decisions for your trades and investments. As you are monitoring those things, make sure you check out part 1 of my NVIDIA series, getting you ready for earnings on May 28th, and smash that subscribe button, and I'll see you back here for the next video.